Your stop gets hit right at the low, and the second you're out, price turns around and runs the way you wanted, without you. And when it keeps happening, it starts to feel personal, like the market can see your exact stop. In this video, how to see it coming, what to do about it, and why it was never personal. And if you missed the first video, that's where we broke down why your stop is just sitting in a pool of liquidity. So start there, then come back. So, price reaches that obvious level, and it either runs or sweeps, and for the first candle or two, they look identical. The good news is, a sweep leaves a very specific signature. It stabs beyond the level and then closes right back inside, usually on a spike of volume that immediately dies, with no follow-through on the next candle. A run is the opposite. It closes beyond and holds, with volume staying elevated. So the tell was never the spike everyone watches. It's whether price can stay beyond the level or get sucked straight back in. Let me put that on a real sequence. Price rallies up into yesterday's high, pushes a couple of ticks above it, just enough to trip the stops resting there, and volume explodes on that one candle. But the very next candle closes right back below the high, the volume dries up, and nothing follows. That's a sweep, something you can name live, not just in hindsight. So here's what you actually do, and it starts before the session opens. First, you build a map of the pools. Mark the prior day's high and low, the equal highs and lows, the round numbers, and the opening range, because that's exactly where the liquidity sits, which is where sweeps happen. Then, in the moment, you run one check before you react. Did price pierce the level and close back inside within a bar or two, on a volume spike that faded, with no follow-through? If it lines up, that's a sweep, not a breakout. And instead of ripping your stop out in a panic, that's the spot you were waiting for. Now the honest part. You can't fully avoid getting swept, because your stop belongs where your idea is actually wrong, and that's the pool. But you can stop confusing a run for a sweep, and stop yanking your stop every time price reaches for a pool you already knew was there. And this is why the videos screaming that smart money is hunting you have it backwards. There's no vendetta, just order clustering and liquidity. You were never a victim. You were predictable. And the moment you can read the signature, predictable turns into readable. If this gave you a cleaner way to see the chart, follow along and tell me about the last time you got swept.